Hey traders, a very warm welcome to you. Okay, so a bit of a story for you now. This is a story that from my trading and something I've done, and the title of this is Making Easy Money from Trading Algos. And no, this is not some sort of pitch where I'm trying to sell you a robot. This is a story about how I made what I call, what it is actually, it was easy money from trading algos, from spotting trading algos. Let me tell you the story and tell you how it went. Okay, so this was 2000 and when would this have been? 2007 maybe, 6, something like that. I'm not sure, I'll have to check it out and I'll probably put it in the description if I remember it. But anyway, trading UK shares on the level 2 screen. So if you're familiar, I'll very quickly tell you about level 2 screen if you're not familiar. So if you are familiar, bear with me guys, the story's worth sticking with. It's quite fun and interesting. So you've got here bid and you've got offer or ask as they call it in the US. So you've got your best price here of say 100 and then you've got your best offer here of 100.25. Okay, and then you've got the quantity of shares. So here you might have 500 shares, here you might have 1,000 shares. And then it goes down like this, 100.5, 100.75, then it might just jump to 100 and 1.5, and then you've got here kind of the amount of shares that is available to sell to buy. These are sellers queuing up for you and you can buy. So if you come to the market, you want to buy, you have to pay that. And let's the same here, let's go with this 7,000 shares at 99.5, let's say 1,000 shares at 99.25, and let's do one more. Let's do 10 shares at 99. So you get the idea. Hopefully you do. If you haven't, I think I've talked about level 2 before. Go and check out a video. We're going to have a look on Google and stuff because this will make more sense. But this story, right? So we've got this scenario here. I'm trading level 2. I'm looking at level 2. This was my kind of edge that I started to grind out a little bit. I'd gone from, ultimately being just losing money all the time to actually finding something that was working very well for me. And that was short-term trading based on the level 2 screen, UK stocks. So you have your buyers stacked up here, your sellers stacked up there. That's the price of your stock. And let's say this is a stock of ABC stock company. And the last price of that was traded would be the price of the stock. And you'd have time and sales here, which you'd have your price, and then you'd have the quantity, and then that would just be streaming through. And they'd be red or green. Actually, they wouldn't, but they'd be giving you history of trades. So how it got to that position it is now. Right. So what we'd have is a scenario where and these are kind of cool. Algorithms were just getting started. And I mean by algorithms, I mean that trading algos were things that were automatically executing. Now they happen over everywhere. They're very, very sophisticated, far more sophisticated. But they're just starting out in the UK. And they were basically executing, the automation of executing large orders. So let's say, these numbers probably aren't going to be right, but let's say you were a fund and you wanted to, purchase 100,000, 725 shares, because that equals however much that equals in monetary value. For example, right? That's your order. Now your algo, you can't just go in and buy that now because you're going to sweep the book. You're going to get an awful price. You need to kind of work the order. So a trader has to sit there. Maybe buy 1,000, then he maybe has to put a couple of thousand, 10,000 on the bid and move it up. Maybe wait a bit, hope somebody fills him, buy some more if they come on. He has to sit and work it. So what they would do is the very first algos, they would break the order up and make it automated. And so example, it'd say, listen, I want to buy that amount of shares, okay, and I want to buy that amount of shares at 100 pence. So the algo would be programmed to split this order up, and they'd split it up perhaps into 10,000 shares, blocks. So they would come along and they would say, put 10,000 shares on here. Okay, and then wait until somebody filled them, someone sold to them. Someone will come along and sell that 10,000 shares, and so they'd fill it and they'd get filled, and you'd see it on the time and sales, it'd be 100, 10,000. And what the algo would do it would automatically reload another 10,000 block. So you'd see it on the level 2 screen, okay? You'd see a 10,000, you'd see a 10,000 all traded through where that was one big chunk, or that someone had taken 5, someone had taken 2.5, someone had taken 2.5, and then you'd see automatically, boom, another 10 would come on. Now, depending on how this was structured, because you'd have 100 here, and you might have some more people sitting at 100. This is the difference between UK and US. So you might have Mr. 10,000 guy here, and you might have like 500 here, you might have 7,000 here, and you'd see all of those. Once this 10,000 guy got filled, he'd come back on again straight away with his next 10,000, but he'd do it and he'd be underneath the stack of the queue, because it's also in time priority as well as price. So you'd have to trade through all those, and then he'd be at the top of the queue again, and he'd get filled. And so you'd see him reloading and putting it back on automatically, if that makes sense. And he was reducing the amount of shares that he's got left to fill. Right, let me go down to the story. Okay, so we're in the story now where the market, trading the FTSE, and let's say the FTSE was starting to fall down. One of these sort of bigger stocks, all the stocks were falling down with the FTSE, and this thing was just sitting here. And these bids were disappearing because people had thought, you know what, I don't really want to buy it because the whole market's falling lower, and it's where we were kind of 10 minutes ago, and now we're down on another 50 points. Really, in reality, there's no news here. This thing should be trading at a kind of 90, 98 or 97 or something like that. The number's not quite right, but that's the point. And so the next best price would be something like, 5,000 shares down here at 97, because that was really what they expected it to do, because the FTSE's pushing lower. That should be pressure on this stock. But this one guy would be reloading his 10,000 shares. So 10,000, 10,000, 10,000, 10,000. So I'd be sitting here watching it and say, hey, I know that the only person supporting this stock is Mr. 10,000 shares here. Okay, he's just sitting there and he's just reloading. And let's have a better example, actually, because this is a bit of a loose example. Let's say he has 105,725. You'll see why in a second. So he's reloading. I'm like, listen, this guy is the only person holding up. The FTSE's falling down, all of the stocks are falling down. The bid has disappeared. He's the only person who's sitting there at 100. He's getting hit and he's putting 10 on, 10 on, 10 on, 10 on. He's obviously not monitoring this algo, because he was sensible, and algos now will drop down lower and lower and lower and still see if they get a price. They won't just stick it at 100. He could be getting filled at 97.25. He's still with the best bid and saving himself so much money. But anyway, this was the sort of early things of the algos. So anyway, reload. I'd be watching it. All of a sudden, he'd do 10, 10, 10. You'd be seeing it 10, 10, 10, 10, 10. All of a sudden, it would come back on with 5,725 shares. Okay, so then I would know that he had finished his batch. I wouldn't know how many shares he's done in total. I wouldn't know until that batch was different. He's been doing 10, 10, 10. The pattern has changed. He's put 10 on, 10 on, 10 on, 10 on, 10 on, 10 on. Who knows how many he's done? We're assuming here he's done 105,725. All of a sudden, it comes back on. Because I've been watching it and I've seen the pattern of reloading. I see instead of 10 come on, that come on. I know that that's the end of his order. And I know I've got a good idea that he's the only guy holding up this stock, supporting the stock at the moment, because everything else is falling down. All the other stocks are falling down, the FTSE's falling down. So what do? The obvious thing is I hit him straight away, and I take that and I sell 5,725 shares at 100. Because the edge is there, and then the next best price is 97. So if I wanted to, I could just bid 97.25 and wait to be filled on that, or I could kind of ride it down and knowing I've got a bit of a leg in because this guy has been supporting it. Now, obviously, he could come back on and start reloading again, and on the FTSE could start to come back up. But the point is, there's no free money in this game. But the point is, my risk is very, 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 very capped, and my edge is huge. We're talking 80% plus edge on this. So this is the kind of thing that, when new technology is coming out and new strategies are coming out and new things, you can keep an eye out for this. This happened, and there was multiple kind of variations of this when the algos were just getting rolling. They were just working out how to best do it. I mean, now if they were executing that size, they'd split it up into random amounts. Do 2,000, 5,000, 2 and a bit thousand, and they would adjust the price as well. So you would unlikely to be able to see it, because it was so basic and it was literally reload, and then whatever was left, then you could see it. You could spot these and pick them off quite easily. So Little story for you guys. Maybe we'll do another one in the future. If you like this kind of thing, give it a thumbs up. And I've got some other stories as well about other algos, different types of algos that we used to be able to make. I say easy money because it was relatively easy. You know, you weren't guessing direction as such. You were just monitoring level 2, seeing that this was happening, recognizing that if this guy was going to go, the price would fall, and then seeing the evidence that he probably would go because that was his last batch, taking that lot, and then seeing what happened. And majority of the time, 9 times out of 10, it would fall and you'd at least make some decent money out of it. So good trading, guys. See you in the next video. Take care. Bye bye.